Hello, employees of Lowe Engineering. My name is Toby Anderson. I work at Arista Financial Group. I'm a financial planner working with individuals every day to help them hit their goals. So to kind of set the stage for this, Arista is the advisor on your 401k plan. So we work with the leadership at Lowe to maintain, to make sure everything's working the way it should, and honestly to help give you the very best 401k plan possible to help you achieve your goals. So the purpose here of this little video chat is to take about 10 minutes. And really, I thought it was a great opportunity now that we're kind of mid-July. We are halfway through 2020, a 2020 that nobody predicted, a 2020 that nobody in January thought we would be where we are today with everything that's happened. But I want to take a few minutes and kind of look at it from an investment perspective. What's happened? What went wrong, what went right, where are we today, and just to help you kind of frame that for your perspective based on your individual situation, whether you're a brand new, employee just started out in your career, or whether you're at the tail end looking toward retirement. And then I want to give you just a few thoughts as we look forward to the second half of the year, and then offer a few takeaways at the end to see if we can help. So to start this, let me share my screen here real quick, and we're going to go through simply 4 slides that I want to cover that I think will help kind of put some perspective on where we are and where we're headed. So the first one is titled "What Worked and What Didn't," and it's the tale of 2 quarters, right? If you look at the bottom charts there, first quarter 2020. Basically nothing worked, right? The market was doing good, which we'll take a look at in a second. And then all of a sudden, here comes the virus, the pandemic, and everything just got turned upside down. And all those returns you see, other than a little bit of U.S. bonds, took a significant hit in the first quarter. But then go back to the second quarter, right? What happened? Between over the next quarter, it was the opposite. Everything worked. Right? Suddenly, stocks were doing great, bonds were doing good, commodities, everything kind of rebounded. And the point there is to help you just remember that, especially with your retirement plan, as you're thinking through things, have the proper perspective, right? Don't have a short-term, 1 month, 1 quarter, perspective on things where you're tempted to make irrational and bad behavioral decisions. Stay focused on the long term. And as you can see here, as bad as things were, they actually turned out okay if you just stuck through things. And this shows it better than anything I can say, right? We came into this year, early January, life was good. Unemployment here in the U.S. was at an all-time low. The economy was doing relatively well. The stock market was continuing some strong momentum from the year before. Quarter after quarter, you looked at any statements you have, whether it's 401k or anything else, and things were just chipping along, not too much to worry about, little volatility here and there, but as a whole, the trajectory is exactly where you would want it. Then comes the mid-February, rumors of the virus, things start getting talked about more and more, and then all of a sudden we realized life's about to change, right? Schools are starting to shut down, businesses are starting to shut down, the whole virus hit, and things just went bad, and they went bad quickly. If you look at the numbers there, it shows that from February 20th to March 23rd, the market dropped 34%. That is the fastest 30% drop in the history of the market. And we felt it, right? It was on the news nonstop. You couldn't help but worry. We didn't know what was going to happen. To put a little perspective on that, those of you that were working and paying attention, back in the recession of '08, that was over a 30% drop as well, but it took 14 months to get from top to bottom then. We just did it in less than 4 weeks. So that's a significant drop. But then all of a sudden, March 24th, little bit of good news. Maybe we started feeling confident that at the time we had flattened the curve, whatever that truly means. And things started getting better. Businesses slowly started opening up. And from March to the end of June, it's up 39%, a 21% gain in the second quarter. That's the best quarter since 1998. So the purpose here is to be like, volatility was really, really bad. But if you just stayed the course, didn't make significant changes, trusted that long-term things were going to recover, you were had recovered most of everything, by the end of the second quarter. Like I'm sure some of you looked at your statement at the end of the first quarter and your heart sunk. You just gasped and were like, oh my gosh, this is terrible. Those of you at the second half of your career, probably even more so than others, because you're like, oh my gosh, this is retirement. And now what is that going to look like? But a short 3 months later and things are back on track. So the point there is to have the proper focus, a long-term focus based on your age, your time horizon, what you're trying to accomplish, and you cannot afford to make irrational decisions, based on uncertainty, because we're always going to be stuck with uncertainty, right? I mean, our mission, I think I told you, our mission is to lead people to financial security. And that is never more important than in times of uncertainty, because that's when people are tempted to make, decisions that might seem and might make them feel good at the time, but long-term is going to derail the plans that you have. So, reach out for help, ask for some assistance, to gain a little perspective, but make sure you have a plan, and make sure that you're on track to hit those as well. So this next one potentially could be a little controversial. I know people aren't too, I know politics isn't that divisive these days. That was a joke. But the point here is, one of the number one topics we're going to hear about going forward, obviously, is going to be the election. What's going to happen? Is Trump staying? Is he going? Congress, House, all that. My point of showing this chart is, don't let your politics and your investments, get too intertwined. In general, the market really doesn't care who's in office. It tends to do fairly well regardless of the different scenarios that play out. So again, it's another reason looking forward, there's going to be volatility. There's no question. There's a lot of things that are still very uncertain. We don't know what the end thing here is with the virus. We don't know what's going to happen with the election. But maintain proper perspective. Don't let your, certain political things, mess up your long-term goals. Because as you can see here, regardless of which party's in the White House, regardless of which party controls, the Senate or the House, the market tends to kind of shrug it off and pays a little bit more attention to the fundamentals. How are companies doing? Are they making money? Things that actually drive, the economy. And it tends to work out fairly well regardless of that. So again, don't let your politics mess up your long-term goals. And here's why. Last slide I want to show you, and this is simply a balanced portfolio. We got it here at 60-40, meaning 60% stocks, 40% bonds over, from 1970. So you got the last 50 years of performance. Look at the three bars on the far right? Any 5-year period, you got 99% of the time you made money, 100% of the time over a 10-year period, and obviously the same over a 20-year period. Even going, down the left side where the numbers are a little bit lower, most quarters tend to be positive over the long term. That's not always. We just went through the first quarter. It was not positive. Yet the second quarter was beyond positive. It was phenomenal. So the point here is diversify your investments in your 401k plan. A lot of you are in what's called target date funds. Those are automatically diversified for you based on your age and time to retirement. So just trust that, if you're properly allocated, long term, you're able to hit your goals. So let me conclude by just saying a couple things. First is we're here to help, right? I work with individuals all day, every day, helping them achieve their goals. If you want to set up, there's a little link at the bottom here that you can get some time on my calendar. If you want to have a discussion about anything, please schedule it. It doesn't cost anything. It's all just through our relationship with Lowe. If you want to review your 401k, I'm happy to sit down and say, like, yep, here's how you're allocated. Tell me what your long-term objectives are, and make sure you're properly done. If you've got old accounts that you want to review, to look at everything holistically, we can do that. So whatever it is that you need, any questions you have, and again, whether you are 1 to 5 years into your career or you are 1 to 5 years from retirement, we're here to help. But again, the purpose of this was just to let you know that, our mission is to lead people to financial security. We want to do that for you and your families the very best we can. So let us help you take that next step. Let us help you, review things to make sure you're on track to hit those goals. So with that, stay safe, continue plugging away, and let us know how we can be of any assistance whatsoever. Thanks. Have a great day.